we've got a full set to take you through the next 1 hour of trade. Mahima Vashajani is with me, and let's talk about how the markets are, because you see on the screen that there is primarily the color green, and it's a good end to the week. Of course, we're playing catch up with the rest of the world. You saw quite the gyration in the US equity markets on Wednesday, perhaps one of the biggest gains that they've ever witnessed on Wall Street. And then yesterday overnight you had cuts in the US equity markets because of uncertainty of how these tariff talks are going to pan out. But the point is that we're very close to the high point of the day for the Nifty 50, up about 2% or thereabouts. And let's look at what's pushing the mark here, because quite a few of the heavyweights are moving. In fact, more stocks are gaining on the benchmark than not. But you have HDFC Bank as well as Reliance Industries that are leading the charge, contributing about 100 points or thereabouts. But you have, see that other number, 270 odd points being contributed. So what that indicates to you, and we should in fact pull up the patchwork and the heat map for the Nifty 50, is that most stocks are gaining right now. In fact, Tata Steel, the top gainer at this juncture for the Nifty 50. The metal counters that have lost so much ground in the run up to today are gaining some ground back. On the losing end, you have Asian Paints, TCS as well, which started the day in the red, has moved in fact to the green. The broader markets, let's pull that up as well, because you have the broader markets that are moving in lockstep with the benchmark indices, and you have the mid cap index up about 1.4% or so. The small cap index up about 2% or thereabouts. And in fact, let's also talk about the market breadth, because that has been favoring the advances through the session. It continues to be that way today, and over 2,000 gainers. So that should just give you a sense of the positivity at the end of the trading week. I'd be curious, Mahima, to look at the volume picture as well for today, because I've heard that a lot of people have taken 4 days of leave to take 12 days off, and some time away from the screen is not a bad idea.
Absolutely. And some counters that are definitely shining in trade today, something like a Camlin Fine Science, Gravita India, both of these counters are topping the chart where the overall market is concerned. There's Garver High-Tech, which is also locked in upper circuit. Some pharma names doing really well. Aarti Pharma, Wockhardt, up both 7% each. There's something like Avanti Feeds, which is also doing well, and this is because of the 90-day tariff pause. The stock had seen significant downtick post the tariff announcement, and now it's seeing some relief. There's Coromandel, there's CCL Products, PG Electroplast. Some EMS names are also buzzing in trade today. PG Electroplast, there's something like Sirma SGS also buzzing in trade today. Dixon Tech also doing well in trade today as well. But some counters not doing well. Muthoot Finance continues to see the pressure post the RBI announcement. And we're seeing a significant downtick today itself in trade. We're seeing a 6% downtick. There's Aavas Finance also down by about 3% odd.
But let's focus in on Anand Rathi and earnings. Of course, the season has started. Hiral joining us to talk about it. We were debating whether or not it'd be a thumbs up or not, and it has in fact traded a little bit lower today.
So if you see in terms of the stock performance, the major concern has been in terms of the AUM, right? And the stock now is seeing gains of around 0.5%. So it's a pretty neutral one on that front. But let's quickly connect with the management. Mr. Anand Rathi himself joining us on the show to discuss how the quarter has been. Mr. Rathi, good morning and welcome to the show. Your assessment of the quarter and in terms of the AUM growth.
We have grown from about 59,000 crores to 77,000 crores in last 1 year, which considering that market has gone up only by 4-5%, still we have been able to increase our AUM quite significantly by 30%. Okay, so I see this is an excellent growth which we achieved in AM despite difficult year we had. Which shows the confidence of our customers, to follow our advice that even when markets are bad, continue to invest money.
Right. So with this kind of market sentiment that you're seeing currently, Mr. Rathi, do you think that the growth is something that will be sustainable even if you have to look at 20 to 30%?
No, we think it will be sustainable because I believe that these markets, though they are more volatile, but if you look at the valuation side and the way our GDP growth is coming, I think this would be a good time to invest because markets are quite on low side. And we have seen in last 25 years, whenever markets have gone down, in a year's time, they have, gone up by 25% to 40%. And therefore, our advice to clients is that please invest more money at this time. If you see the data, that will prove to you. So you don't have to be afraid of volatility or the lower markets. So I believe that our growth will continue to be like that. And actually, we expect that in next 1 year's time, we would be able to touch the AUM of 1 lakh crore.
An AUM of 1 lakh crore, that's the key highlight from this conversation right now. As you're saying, you're advising investors to put in money and invest right now. But what is the mood of the investors? Is there fear?
You see, yes, retail investors have more fear, but again, it depends. Our clients are primarily the wealth clients, which are the big clients and wealthy clients. They are not retail. And our advice to them, is that we believe that this is the right time to invest, and they are following advice. That is why in last 1 year we have collected more than 12,500 crores as the new money from the clients.
Right. Mr. Rathi, the next big aspect is in terms of new investor onboarding, because that becomes key for a company like yours. How is that part of the business or process going, and how are you expecting that growth to come in?
I think the market is so big in terms of wealthy people. If you see in last 1 year, we have been able to increase our relationship from almost by 17-18%, the number of customers. And we believe that this trend should continue. I think every year we should be able to add 15 to 20% new customers, because there is a large number of wealth clients who are still not served by proper wealth managers, or they are not adequately served.
Right. Mr. Rathi, from a market perspective, some time back you did move out of the small and mid cap space, and your opinion was to stay away from it. What's the status now? How are you looking at it?
No, we didn't move out. Our advice to our clients is a combination of about 14 mutual funds, which also includes mid cap and small cap funds. Again, our belief is that today again is a good time to get into mid cap, small cap, because they have really gone down very sharply. Obviously, you have to select the right fund in that segment, but we are not averse to investing in small and mid cap.
So not averse to investing in small and mid cap. And what about the export facing sectors? What's your stance? Are you moving out currently, taking the uncertainty into consideration, or would you advise to stay invested?
Obviously, if you are looking at individual company, you should look at that, whether particular is going to be affected. But again, you can look at the other way around, that where the growth opportunity will increase. We are still not clear what should be the final, the thing on the tariff. But suppose if our tariffs are lower than the other competing markets, other emerging markets, maybe there is a good opportunity for our exporters to increase our exports, because it's a competitive market. And therefore, I think exports in particular, some segment may get affected, but not all. I think by and large, I don't see that our exports can get affected very significantly.
And we were recently discussing about the mutual fund deployment into equity markets in the month of March. That has been the lowest since June 2023. What would this data actually indicate? Is it that mutual funds are looking at other opportunities in terms of investments, or is the mood check again amongst mutual funds also slightly bleak for the equity markets?
No, I would think that when difficult time comes, people try to maintain more in cash than investing. The inflow has not reduced significantly. Yes, inflows have. If you see SIP, that inflow continues to be at the same level or better. Yes, sometimes, when fear comes and many investors who do not have proper advice or guidance, they exit in difficult markets, with the fear that markets may go anywhere. But while I think DIs are investing regularly, yes, it is less than earlier. But I think this trend, I think you will see change in the current month itself.
Right. All right. Thank you, Mr. Rathi, so much for joining us on the show and sharing the views. So clearly, 1 lakh crore AUM of the next 2 to 3 years. That's the key highlight, Alex, that I'm picking up from this conversation. And clearly, yes, there is fear amongst retail investors, but HNIs are sitting pretty resilient from what Mr. Rathi is indicating.
And looking for avenues to deploy. That meme comes to mind, the Star Wars meme, where you have Anakin Skywalker and his mentor. And his mentor is saying, buy the dip. And Anakin is saying, with what?
What?
So people don't have the money to buy the dip. But I'm sure that a lot of you tuning in will have questions about whether to deploy right now. Of course, some of you might just be sitting on cash. So let's figure that out. We've got Neerav Ashar, who's a head of equity research at Latin Manharlal, as well as Jatin Gedia of Mirai Asset Sher Khan. Thank you so much, gentlemen, for taking the time. I do want to point out that in the last few minutes, you have seen just a bit of a coming off from the high point of the day for the Nifty 50. And it's very tiny, but we'll have to see whether the strength continues through the day. Watch out for that 22,800 mark on the upside and whether we close above that. But let's go to the first question today, and that is in fact by... Apologies, I'm holding back a sneeze. Rajiv Sethi, he's asking about RK Forging. He's got 500 shares at a price of 692 and he's looking for a long-term view on this one. He's sitting on gains at this juncture. Neerav, what should he do based on the fundamentals?
Good morning and thank you for the invite. I think Ramkrishna Forgings has got good expansion plans in place. There was some apprehension that the forging companies are likely to be impacted on account of the Trump tariffs. But here we have a 90-day relief at this point of time. So I think in the short run, we might see some recovery or pullback in the stock. And I think from a medium to long-term perspective, the prospects look quite reasonable.
All right, prospects look quite reasonable for RK Forgings, is the view coming in from Neerav. Our next query is on Praj Industries, and Shivakumar is writing in from Karnataka. He's holding 672 shares of Praj, bought at 594 a piece, and he's saying he's sitting on a loss of around 18% right now, which amounts to around 64,000 odd rupees, and he wants a long-term view on this particular counter. Neerav, what's the view like for something like a Praj Industries?
Well, with respect to Praj Industries, I think the prospects are quite good, but I think the setback which we have seen on the ethanol front is something which has resulted in a fall in the price of the share. But if one were to look at the prospects, they look quite attractive. So the advice is that if we can average, then we should average at the current levels with a medium to long term perspective.
Okay, I do want to remind you guys, if you want to call, please do so on the number that you see right there. That's the landline number. Okay, there. You can call us there. I think
Alex is in Friday mood for sure today.
What gave it away? So at least for once, the Friday mood is supported by the fact that the markets are in the green.
Yes.
And well, make hay when the sun shines. Satyan is calling us from Kerala. And he's asking about or rather he's messaging us from Kerala. He's asking about Bama Lorry. He's bought this at a price of 278 rupees per share, and he did so in September of 2024. He's incurring a loss at this juncture, and he's wondering, based on the fundamentals, whether it's prudent to continue holding. Should he add more to his position? Neerav, on the fundamentals, Bama Lorry is something that people hold in their portfolios. What's your opinion?
Well, it's a long-term bet, but I think he got it wrong on the pricing front. I think so. There was a sharp crash in the prices after this. It's a good dividend yield stock, but I think considering the price at which he bought, he should switch over to some better option, say a Hoodco. Shifting to Hoodco would be a better option at this point of time.
Okay, shifting to Hoodco will be a better bet right now, is the view coming in on from Nirav. Our next question is from Mars, who's writing in from Mangalore. He wants an outlook on the IT sector, especially on TCS and HCL, and wants to know if this is the right time to make a fresh entry. Jatin, I'll come to you on this one. TCS announced its earnings yesterday, and pretty much in line. Revenue was in line, but there was a slight miss where EBIT and PAT is concerned, and this was due to tactical interventions from promotions as well. But what's the view like where it comes to the charts, and is this the right time to enter both of these counters or maybe one of these counters?
See, overall our view on the IT, Nifty IT is pretty negative, because the pullback that we have seen post the sharp decline, the pullback doesn't seem to have formed a short-term base. So every pullback is likely to be sold into. So we are negative on the Nifty IT index as of now. So even if he wants to do a fresh entry into some of the fallen down names like TCS or other frontline stocks, I think he should wait for decent amount of pullback to come in these IT stocks before venturing out and buy. So as of now, our view on the IT is negative, and you should avoid buying in stocks like TCS or any frontline names as of now.
Avoid buying in any of the large cap names, despite what you've seen on TCS. And of course, this sector as a whole has dropped quite considerably. Of course, it's recouped some of those losses, but it's one of the worst hit in April so far. Let's take Saras's question, and Saras is writing in from Bengaluru. RCF is the name of the counter that he wants to know about. He's bought at a price of 212.5. 80 is the quantity, and the stock is up and about today, 5% or thereabouts, and it's still considerably below his buy price, so he's incurring a loss right now. He's looking for a 6-month time frame. Jatin, the question is for you, therefore. What would you do with this?
See, I would suggest to average at current levels. The reason being, it has now come to a very crucial support zone of 120, 115. That was the previous swing low from where the new rally started, and the stock went up till 240. So as of now, I think the fertilizer space is something which is doing well. Coromandel is doing well. RCF is doing well. The other some of the fertilizer names are also doing well. So I believe that before this season of sowing, the fertilizer space is likely to do well. And for RCF, he can average at current levels. On the upside, I am expecting levels of 155 to 160 in the period of 3 to 4 months. So I think RCF can be a good bet to average out at current levels, and around 155, 160, I think he will incur a less loss as compared to what he's incurring right now. So average at current levels is the suggestion.
Average at current levels for RCF is the view coming in from Jatin, where charts are concerned. Our first caller for the day, Ramesha, is calling in from Bengaluru. A very good morning to you, Ramesha. How can we help you? Hi, I can hear you, Ramesha. Go ahead with your query. Okay, I think we've lost the caller. Let's take the next query then from WhatsApp. Sunain Rawat is writing in all the way from Japan. He's holding Cochin Shipyard in Oil India stock for long, 5 to 10 years is what he's indicating. And he wants to know if he should hold or sell. I'll take this up with you, Nirav. He's a long-term investor, and since he's writing in all the way from Japan, I think we'll give him a leeway and take an opinion on both of these counters, Cochin Shipyard as well as Oil India. What's the view like? Should he continue to hold or sell?
Well, both of them look attractive. In the case of Cochin Shipyard, of course, the focus on shipbuilding, the focus on Atmanirbhar Bharat, etc. Augurs extremely well. But I think he should try to add some quantity of Mazgaon dock as well to diversify their portfolio a bit. And also, of course, Oil India is looking quite attractive from a medium to long-term perspective.
Okay, all right. So that's a comprehensive view. And thanks so much for tuning in from Japan. All right. So if you're giving more preference to people who are tuning in from Japan, then I should give preference to people from my home city of Pune. Anjali from Maharashtra is only asking for one stock, though. Anjali is so kind of you. Electra is the name of the counter that she wants to know about, and it was in the news. I can't remember exactly what it was about. It was an order win, if I'm not mistaken. It's up about 4.4% or so. She's bought at a price of 1,760, so slightly elevated level. And she wants to know what to do with this. The loss that she's currently sitting on is about 6,000 rupees, she says, and the quantity is about 10. So the stock is reacting on the back of an order win. She's not specified what her time frame is. So Nirav, on the fundamentals, what would you do with Electra Green Tech?
Well, it's a play on electric vehicles and the sustainable energy space, sustainable vehicle space. So I think they do tend to get a big chunk of orders from the budgetary allocations as well. So I think the view is to hold with a medium to long term horizon.
That's the view with regards to Electra Green Tech, and like Alex earlier mentioned, it's buzzing on the back of an order win, which is a 424 crore order win from the Himachal Road Transport, and this is for 297 electric buses. All right, our next counter that we're talking about is Kalyan Jewellers. Sivanesh is writing in, he's holding 117 shares of Kalyan bought at 484 a piece, and he wants to know as to what should be the outlook from a longer term perspective. Nirav, I'll come to you. Lots have been happening with the counter. Now that the stock is stabilized, what's the outlook like?
Well, I think with respect to Kalyan Jewellers, I think the situation was quite volatile some time back, and the stock did behave in a volatile manner. It's a hyperlocal jeweler. But I think from a medium term perspective, it's better to switch over to some more reliable names like a Titan.
But specifically, so he also wanted to know about the pledge, the promoter pledge, and the fact that it had been increased. If I remember correctly, we did address it when it happened, but is that at all a cause for concern for you?
Well, when you are looking at such aggressive growth plans, naturally promoters tend to raise money by pledging certain amount of shares, and all these things are commonplace. So there's nothing really intriguing about that. But I think overall, from a safety perspective or from a more reliable management perspective, I think Titan would be a better bet.
Jeevan is calling us from Karnataka. Hi Jeevan, good morning. And you're asking about Canara Bank, I believe?
Yes, sir. Yes, sir.
Please go ahead.
Yes, sir. Sir.
Please go ahead. What is your question, Jeevan?
Sir, I bought 170 shares in the Canara Bank in the price of 92.
Okay.
Can I hold it or sell it for long-term perspective? Next 2 years, what is the price of?
Okay. And why do you like Canara Bank?
Sir, Canara Bank, sir, my brother is telling that you should buy, they will grow, the mid-cap, they will grow a future in that. That's why I buy.
Yeah, and you want to check whether your brother's advice is correct. I get it. All right, Jeevan. Jeevan, what's your brother's name?
Sachin, sir.
Sachin, all right. So you want to check if Sachin's advice is correct. Why don't we go across to Nirav to check if it is. Nirav, what's your view on Canara Bank? Sachin says it's a bank that you should absolutely buy, and he suggested the buy at a price of 92 rupees. Would you consider buying more at this point?
Well, we all see public sector banks all around us, basically, whether it is an SBI or a Punjab National Bank, Bank of Baroda or Canara Bank. These banks are present almost everywhere. They have a widespread presence and top of the mind recall also. But unfortunately, from a long-term wealth generating perspective, I think it's better to be with some of the private sector banks.
Which is what? Which would you suggest buying right now?
Which would be the likes of an HDFC Bank or an ICICI Bank or an Kotak or an Axis.
Okay, so that's the view with regards to where banks are concerned. Our next query is on IRFC. Anurag from Jaipur is writing, and he's holding 2,000 shares bought at 169 a piece, and he wants to know as to where the technicals are concerned. Jatin, I'll come to you. What are the resistance and support levels that you're observing on the charts for IRFC?
See, in the case of IRFC, the immediate resistance is around 131 to 133 levels. wherein we saw the recent swing high being fizzling out. So until and unless 131, 133 zone on the upside is not taken out, we can expect a range bound movement. On the downside, 117 to 115 is wherein the support level comes in. So the broad range for IRFC is 135 on the upside, and on the downside 115 is the range. So overall, we believe a range bound price action is likely in the case of IRFC.
Okay, I think the calls have been to avoid IT at this juncture, but then Kannan is specifically asking about KPIT Tech. He's bought at a price of 1,310. He's writing, of course, from Kerala, and he's holding 93 shares. He's asking whether this pause in the tariff implementation will benefit the company, but he's also got a time frame, Nirav, of 1 to 2 years. What should he do with that time frame in mind?
Well, as far as KPIT Technologies is concerned, then I think we could see some modest recovery going forward in the mid-cap IT space. But if you were to ask me, I think the large cap is looking far more attractive, because there's been quite a significant compression of the PE multiples as far as the large cap IT stocks are concerned. Even yesterday we saw in the case of TCS, the stock is available at around 24 times price to earning multiple, which is quite attractive. So I think the focus should be more on the large cap IT space.
Should be more on large cap IT space from a fundamental point of view, is the view coming in from Neera. With that, it's time to slip into a very short break, but we'll be right back answering all your queries on the other side, so stay tuned.
That's huge. That is a biggie. It's out of
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. Simple लग रहा है तो सुनने में.
You know those messages you get? Oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%.
Welcome back. You're watching Ask Profit, and this, of course, is the show that gets you answers to all of your stock-related questions. On this end of the show, we've got Sneha Sheth joining us. She's senior analyst at Angel One, and she's going to be answering all of your technical-related questions. And we've got Murli calling us from Bengaluru. Hi, Murli. Very good morning to you. How can we help you today?
Yeah, I bought a company called TD Power Systems.
Right.
At a rate of 500 shares at the rate of 410.34.
Okay.
I happened to see the interview of the management, which is sounding confident. I to some extent I dealt with these people, very conservative, but they are given a very good thing. Japan is bigger than the company. They are sounding very confident about the future, even though the tariff and all are there, issues are there.
Right.
But they are sounding quite confident about their growth.
Right.
So on that scope, I bought it.
Yes.
What is your view, the view of the analyst, fundamental analyst? I'm willing to wait for more than a year. Yeah.
Understood. Okay. TD Power Systems, market capitalization of just over 6,000 crore rupees, involved in the manufacturing of AC generators and electric motors for various applications. This is basically what the company does. It's up about 3% in trade today. Nirav, on the fundamentals, do you have coverage and what's the view?
Well, we've seen this company some time back, and I think the prospects appear to be quite attractive. And a lot of companies which are working in this AC related space and electric motors and drives related space have very strong order books and expansion plans lined up. So I think this company, he should stay invested with a medium term horizon.
Alright, so that's the view coming in for TD Power. Our next query is on Tata Technologies. Rajiv is writing in from Mumbai. He's holding 1,000 shares bought at 700 a piece. He wants to know whether he can add at current levels or not. Sneha, I'll come to you on this one. What are the charts indicating for Tata Technologies? Is this the right time to enter and average out?
Chart structure, I think it looks decent, and someone who wants to, go ahead and add a fresh long at current levels, they can go ahead. I think there is no issue as such. I think keep a strict stop loss around 590 and go long over here.
Okay, all right. Go long on Tata Tech. We've got Satyan, and he's very happy that we're taking his question. So he's given us 2 thumbs ups. Satyan, right back at you. The first question, or rather the stock that you want to know about, Shambhal Fertilizers. 515 is your buy price. You haven't told us how many shares you're holding, and you're looking for a short to medium term view on this, and you're looking at whether or not to book profits at this stage. So I will ask on the technicals then, Sneha, what's the view?
The chart structure looks quite good, Alex. If you see the counter, there was a resistance around 550 odd zone. After that, this counter has surpassed those 7, and all the dips, whenever we are seeing some dips coming in, that is being bought in. In fact, if you see the daily chart structure, the counter is trading above all the key moving averages. So the chart structure is quite good. The counter has been doing quite well despite such the overall correction what you have seen. So I believe someone who's holding a long position, there shouldn't be an issue. In case any dips, one can go ahead and long even, keeping a strict stop around 570, 550 zone.
Alright, so that's the view with regards to Shambhal Fertilizer. The next query is from Dinesh, who's writing in from Gurgaon. His question is on Bank of Maharashtra, and he wants to know as to what are the growth prospects with respect to the counter for the next 6 months down the line. Maybe 6 months, Nirav, is a shorter span, but what's the outlook like for Bank of Maharashtra?
Well, I can expect very moderate growth prospects going forward, but I think you should consider private sector names for investing.
Okay, I just want to point out that the Amphi numbers are out. I will just try to address them in just a bit. In the meanwhile, just very quickly take a look at where the markets are, and I'll just download the...
Sure. Let's pull up the Nifty 50 and of course then the broader markets and see how the markets are faring in trade today.
Okay, I have
let's
it.
pull up. Do we
have
have the Amphi
yes,
data? All right, we have the Amphi numbers.
Okay, so let me look at the overall number. The grand total, of course, is for the month of March, and so therefore witnessing an outflow on a consolidated basis is not out of the question, because you generally see significant outflows from overnight debt funds. So as a result of which, the overall outflow for the industry, for the mutual fund industry, stands at 1.6 lakh crore rupees. But the more important number to focus on is going to be the equity fund inflows, and here I'm looking at actively managed equity mutual fund schemes. That has stood at 25,082 crore rupees, and it is considerably lower than what you saw in the previous month. In the month of February, the inflows were as much as 29,300. Having said that, it's still positive that the mutual fund industry is witnessing inflows, and I'm looking at the various categories, and all categories have actually seen an inflow on a net basis, and I'm talking about actively managed equity mutual fund schemes. So for example, something like a large cap actively managed category has gotten inflows of close to 2,500 crore rupees. You have a large and mid fund that has gotten inflows of about 2,700 crore rupees or thereabouts. Very interestingly, the small cap and the mid cap space, the actively managed ones, are actually getting considerable inflows as well. So the mid cap funds have gotten inflows of 3,439 crore rupees, while the small cap funds have gotten inflows of close to 4,100 crore rupees. We've been watching balanced advantage fund as a key category as well, because a lot of deployment of funds has been taking place here. But in the month gone by, the net inflows only to the extent of 776 crore rupees. So people seemingly are gravitating towards pure equity. Multi-asset funds is another category to watch very closely. Inflows of 1,670 crore rupees during the quarter gone by. Index funds, interestingly, have gotten inflows of about 3,500 crore rupees. So seemingly a lot of inflows coming through in this route as well. And other ETFs, which is the subcategory in the classification of data that they release for the monthly basis, other ETFs have gotten inflows of close to 11,000 crore rupees, which means that a lot of people have gone out and bought, for example, a Nifty 50 ETF or other equity ETFs as well. Gold ETF, and this is very interesting, gold ETFs, because of the interest in gold as a commodity globally and the fact that the prices have gone up quite considerably, that has seen outflows on a net basis to the extent of 77 crore rupees or thereabouts, and that probably indicates to you that people that had gotten in early on might just be taking some money off the table. For a whole, if you're looking at the debt mutual funds, that category has seen an outflow of about 2 lakh crore rupees, which is, as I told you, very normal, because the outflows from liquid funds as a whole, which is your overnight funds, is about 1.3 lakh crore. This normally happens to the end of a quarter, and at the start of a new quarter, you will see inflows to this extent as well. So that's nothing to really worry about. The AMFI also releases information on how much of flows come through the new fund offer route, and understandably, while the market has been under a little bit of pressure, mutual funds have not been aggressively launching schemes, which is positive if you think about it, because 25,000 crore of inflows into actively managed funds and close to 11,000 crore rupees in the way of ETFs is without considerable inflows from new fund offers. In fact, actively managed funds, there were only 4 that were launched in the month gone by in March, and they only received inflows of about 457 crore rupees, which means that 25,000 crore rupees that has come through from the actively managed funds are mostly organic, mostly through existing schemes, which is certainly a positive. We were supposed to speak to, so we will speak to somebody from the mutual fund industry just to understand what these numbers mean. But let's actually pull up some of the capital market plays, something like a CAMS, even something like a BSE, maybe some of the asset management companies as well. CAMS is up about 1.5%, BSE about % or so. And let's pull up something like an HDFC MC, doing reasonably well. Aditya Birla Sun Life, let's see what that's doing in trade today as well. And it should be up in the green as things stand right now, because these are positive numbers. At least from my lens, it indicates that during a turbulent period, mutual fund investors have continued to invest. And we have, of course, yet to get the inflow number on the SIP data, because this is going to be critical to watch, not just the gross number which is shared by the AMFI, but also the difference between the folio addition and the folio cancellation. In the recent past, over the course of the last few months, 2 or 3 months, that has been net negative, in that there have been less folios added than the number of folios in the SIP book that have been cancelled. And this is something that is normal because a lot of retail investors tend to look at volatility in the market and they worry about the investments that they're making and they tend to stop. A lot of advisors caution against this because this is the time that you acquire more units when the markets drop, and so you should keep your SIPs going.
Right.
We're still trying to get a view on this, but then all told, the data that I'm looking at, and I'm looking at, let me also look at sectoral and thematic funds, okay, because this is an interesting data point. Whereas in months past, a lot of deployment has taken place on a net basis in sectoral and thematic.
Yes.
170 crore is the amount that is on a net basis gone into sectoral thematic in the month gone by.
Right.
Which is telling because these are schemes, these are categories of mutual fund schemes that see a lot of movement. And one would assume that a healthcare fund or an IT fund or even a BFSI fund to a lesser extent would have seen a lot of turmoil in the month of March, in the month of February before that, and also so far in April. If you look at the sectoral movers, and maybe you can pull up a Nifty IT, just to drive home the point, in the month of April so far, of course there's a bounce back. This is intraday. I want to talk about the April so far number and look at that. So it's 11%. So if you had invested in an IT focused fund, you would have seen significant drawdowns in just a few sessions. And so what happens is people tend to panic, understandably so, and you will see selling as well in these funds, which is why a lot of people advise that you should get into diversified funds.
Right.
This is actually positive, in my opinion, because you have inflows of only about 170 crore.
Do you also think that the March numbers generally are a little skewed because of tax harvesting as well? Do you think people also consider tax harvesting when mutual funds are also concerned, book profits and then again invest once the financial year ends?
So to a lesser extent, I think that is true. But I think long-term capital gains to turn into negative is not very easy because a lot of people have invested over the last 3 years, 4 years post-COVID. And even if you had a conservative portfolio, Mahima, chances are that if you started investing at COVID lows, you would still have, and you've been deploying on an ongoing basis, you would still have an XIRR of over 12, 13, 14%, maybe even 15%. And so from that perspective, you're unlikely to have people that are booking long-term capital loss. So as a result of which that tax harvesting, maybe tax harvesting also from the perspective of gains.
Because that 1 lakh crore, up to 1 lakh rupees
1.25 lakh
is 1.25 lakh now is exempt. So people might be booking profits around that and
I
maybe
don't think
investing.
that you see so much of that.
That's more towards stocks. But I think the interesting part here also is there are outflows seen in gold ETFs. I mean, where one side analysts are anticipating that gold will reach to that 1 lakh mark. It's interesting that people are booking profits, and if they're booking profits, I'm wondering where they're actually deploying. Are they deploying? Are they actually buying the dips? Because even that is not seen, right?
So let's find out what Mr. R. Shivakumar, who's a head product corporate strategy and BIU at Axis AMCs, says about the numbers, because Mr. Shivakumar, we've got a positive flow overall for the industry. I'm talking about the actively managed equity flows. They stand at close to 25,100 crore rupees. And I looked at the number for other ETFs, which as I understand it also includes your equity ETFs. And the inflow is about 11,000 crore rupees. So people are buying. What do you make of the initial take on the numbers?
You're absolutely right. The net flows have remained reasonably stable or reasonably strong, but it is of course a lower number than the previous month, which was about 29,000 crores on equity-oriented schemes. So you had already started seeing some slow on net flows in the last couple of months. I mean, this number routinely was about 40,000 crores in the previous month. So clearly some deceleration, but not a complete stop in terms of net new flows to the industry. We will, be tracking how this changes going forward. A lot of the volatility that's been induced in the last few days, obviously, is not in the numbers for March. So we'll have to wait and see how this looks. what I can say is that the first incoming data for the first few days of April continues to point to the similar trends as we have seen in the previous month.
How much of this are you attributing to also, and if I look at the previous month number which you referred to, around 29,000 crore rupees into actively managed funds, and I look at the NFOs that were launched in that month, there were 8 schemes that were launched in that category and 2,500 crore rupees mobilized, whereas in the month gone by, in the month of March, of course, understandably, mutual funds were a little more circumspect about the products that they were launching, and so only about 500 crore mobilized there. So if you remove those two, then you're talking about a more or less like-for-like inflow into actively managed funds. Wouldn't you agree?
I do agree, but we must also be careful that when we look at investors investing into NFOs, they are not investing independent of their investments into total equity, right? So while some of that investments in NFO would be over and above their normal allocation to equities, I would think that the investor's first choice is how much do I deploy in equities, and then do I do it in an existing scheme or a new scheme, right? So the waterfall suggests to me at least that the NFO flow reflects the overall softer sentiment towards equity. And again, I would like to stress that it's too early to take a call about the recent volatility. This just is a reflection of what we've been waiting for since the market started correcting over the last 6 months, right? So it's more of a function of how the investors are looking at the overall equity allocation, not specific to NFOs.
It seems also, Shiva, to me that people are buying the dip because if I look at the other schemes category, which includes index funds, gold ETFs and other ETFs, as well as fund of funds investing overseas, the overall inflows on a net basis in this category is 14,000 crore rupees, 11,000 crore rupees out of which has come in the other ETF category. What does that tell you? And also the fact that gold ETFs have seen an outflow on a net basis of 77 crore rupees at a time when we're very close to, if not at, all-time highs for gold.
That's a very astute observation. I think people are using ETFs and other passive products to get, in some sense, time or to time the market or to get timely exposure into the beta of the market in some sense, right? Without having to worry about the scheme type or thematics, etc. So I think it's absolutely right. There would be a certain segment of investors who are looking to pick up opportunities right now. There has been a meaningful correction, and therefore there would be a decent chunk of investors who are just using index funds or ETFs to kind of get an entry into the markets when they believe that the prices have corrected appropriately. So it is worth watching as a development. The second point here in the case of index and ETFs is that we must also be mindful of the fact that it's not as big a category. It has, of course, grown significantly, and therefore month-on-month changes are, I would say, a lot less stable than is the case in equities. So that's something worth keeping in mind.
Okay, absolutely. Shiva, thanks so much for joining in, for giving us that immediate take. Of course, we'll touch base with you over the course of the coming months as well to see how durable this is. Thanks so much.
Thank you.
All right, so there you go. See, it's more positive than anything else, in my opinion. Of course, you've seen a little bit of a cool-off, 25,000 crore rupees inflows into actively managed equity schemes compared to 29,000. Of course, that number has been closer to 40,000 crore in months past, and this is in December, where people at that time thought that they were buying the dip. And then we've seen what happened to markets in this year, in 2026. It's been volatile, and that's the name of the game. We will come back to the SIP numbers when we do get them, because that's, as I mentioned, a very critical number to watch. But let's go back to the questions that we've gotten. And we've got, in fact, a caller from New Delhi. Manav is calling us. Manav, thanks so much for holding the line. We were addressing the AMFI numbers and the mutual fund numbers. What's your question for us?
Good morning, everyone. First of all, I want to thank NDTV for bringing out such a show who is helping me, new investors like us. Like we are very new to market, and this show helps really a lot.
I'm glad to hear that, Manav.
Yeah, I want to ask about Indraprastha Gas Limited.
Yes.
I haven't started investing in it, but at the current levels, do you think it is the right time to enter IGL? And I want to hold it for long term.
Yes. Okay. All right, so I got your question, and thanks so much, Mana, once again for your very kind words. Those are the that is the feedback that keeps us going, in fact. I'll come to you, Nirav, on the fundamentals, because you saw a price change announcement recently for IGL. It did react to that. What are the views on the long-term fundamentals? Would you deploy right now?
Well, I think IGL and MGL, of course, both very fundamentally very strong companies, both important vehicles as far as the green energy, CNG, etc. are concerned. IGL particularly has a very strong balance sheet. They have pre-decided margins and very, very stable business model, which has been disturbed of late. And I think the policy flip-flop which has happened in the recent past has spoiled the picture as far as IGL is concerned. Recently, we had the Delhi draft norms for CNG to phase out the CNG buses. So I think that again has become a negative overhang as far as the stock is concerned. So for the time being, I would advise to stay away from the stock.
Okay, that's the view coming in on IGL. Our next counter is an IT counter. Infosys is the one we are talking about. Shruti from Dharwad, Karnataka is writing in. She's bought 119 shares at 1537 a piece, and she wants to have a view from a longer term perspective. Nirav, your view on Infosys?
Well, definitely it's a hold from a long term perspective, and if possible, she can even average.
Okay. All right. That's the view on Infy. All right. Shruti, okay, we just took Shruti's question. The next question is on VST Industries. It's from Kuwait, and we got Prashant asking, he's bought at levels of 279. What's the future? He's got a 2-year time frame. Nirav, coming back to you on this one, again, portfolio stock, would you hold?
Yes, definitely. Would like to add also, if possible.
Okay. Let's take the next one, and in fact this is a question all the way from New York. Komal is staying up late and asking about, I do not know actually, what is the name of the, do you know the stock? Eternal?
Eternal, yeah, that's Zomato.
Oh.
Zomato is renamed as Eternal. I know, it will take some time for people.
It's going to take a little time, yeah, well, okay.
Sink in with that name, but yeah.
Go ahead, ask about it.
All right, so Zomato is the counter that we're talking about. 1,000 shares have been purchased at 242 a piece. Komal wants to know as to what should be the next course of action. I'll take this up from a longer term perspective because she wants a long term view. Nirav, 242 is slightly elevated because right now the stock has been under significant pressure. But what's the view like and outlook like once everything falls under place?
Well, new age businesses and new business models and consumption theme. I think this fits into this categories. So I think advice to hold.
It's going to take me a little while, but yeah, I will remember it because of today. And
it's 3%.
There you go. It's 3% up. All right, let's talk about the next one. We've got Shilchar Technology. I'm not sure if we got a view on this one, and we've got a question on WhatsApp from Abhishek Kabra. Any view on this one, Nirav?
Never seen that.
Never seen it. What about you, Sneha? Any chance that you've looked at this stock? No.
No.
Oh, it's BSE listed. All right. So we don't have a view on that one. Okay. So guys, very small companies. Unfortunately, we don't have a view on these. Jaiswal Neco Industries. Again, this is a question from Manthan, who's writing from Ahmedabad. Unlikely that we have a view. In fact, we've got the next one. Do you have one?
Yes, we'll take Poonawalla FinCorp. Samba Siva Rao from Hyderabad is writing in. He's holding 150 shares of Poonawalla at an average price of 485 a piece. He wants to know whether he should add some more right now or not. Sneha, on the charts from a 1-year perspective, is this the right time to enter, or what should be the next course of action?
If you look at the chart structure, this counter has given a strong move recently, and in fact the dips are being bought in. So I believe if someone wants to go ahead and long for a 1-year time perspective, there is no harm in taking a fresh long in this counter. Keep a stop around 340 and go long. There are chances that once this counter heads beyond 365 zone, we may see a smart buying interest coming in, which can bring it at least towards 380, 385 would be the first target, and slowly and steadily it can head towards 400 zone even.
Okay. All right. I believe we do have the SIP number as well. It's coming at 25,926 crore rupees. All right, on that note, we'll talk about this in more detail. Nirav as well as Neha, thanks so much for joining in today, and pleasure having you on the show as always. Guys, we'll get you more analysis on the mutual fund data that comes through. But that brings us to the end of this edition of Ask Profit. Thanks so much for watching. From Mahim and myself and the team that put this show together, happy Friday. Have a good
long
one.
weekend.
And a long weekend. We'll see you next week. Do stay tuned. Up next is KYC.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार, simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
So we want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
All these narratives are dictated by the market.
So what could be the biggest risk to Indian markets?
There is, challenge to that assumption of policy continuity. That to me would be the